Hello and welcome to Real Estate in Tucson and Southern Arizona. We're here today with Tom Heath with Bank Capital, and there are so many questions when buyers are getting loans, and one of the big items that is sometimes a hurdle is how do we get a loan through underwriting, because it basically underwriting is who's going to approve the loan. So Tom, could you expound on what actually happens in underwriting when a loan has been presented to them?
Would absolutely love to do that. There are a lot of different programs, so this is sort of a generic overview. Each program might have its own specific requirements or guidelines.
Now, when you say program, are you talking like FHA loans, conventional loans?
Exactly, and then even within each one of those categories, there could be subcategories that have more strict or less stringent requirements. But in general, an underwriter is going to consider four major components. I'm sure we're all familiar with credit. That's the character of someone, and we consider that their capability of repaying, their desire to repay. And we look at a history. How have they paid in the past? It doesn't necessarily mean that if you've had troubles in the past that you can't get a loan, but certainly there's going to be some explanations necessary if you have had some credit challenges. The longer amount of time that's passed between your credit challenges and now, it's going to strengthen your profile. Something very recent could certainly alert an underwriter to some potential issues within your situation. Keeping in mind that an underwriter is not only trying to qualify you for the loan, want to make sure to put you in a situation where you can be successful. If there's challenges that are facing you and it might affect your ability to repay the loan, no one wants to put a borrower in a situation where they might not be successful. And so it's a twofold purpose. Meet the guidelines and also want to protect the consumer. In addition to credit, we're going to be looking at your capacity. That's your income. How can you repay that? Currently, we're looking at your debts, such as car payments, loans. We're not looking at utilities or auto insurance, the things that you have an obligation to pay. The general thought is we want to keep you around 40 to 45% of your gross income. So we know there's going to be deductions for taxes, child care, 401k, different things like that. And we look for a standard. So we look at someone's gross income because everyone's financial situation might be a little bit different. In addition to that, we want to know what your asset situation is. What kind of deposits do you have in the bank? What's your retirement account situation? Not that you would need all of your funds to close, but if something were to happen, what's your backup plan if something unexpected occurs and you might have trouble making your monthly payment? What can you fall back on? We'll consider those factors. And then the final piece would be the collateral. You might be fully qualified, but the home itself that you're purchasing may have conditions or issues that an underwriter might consider troublesome and may not want to lend as much money on that particular property, even though you as an individual may be a great credit risk.
There are just a lot of different elements that an underwriter does have to look at.
Absolutely.
Okay. We'll continue this on a series of buying and loans, and we will see you next time at Real Estate in Tucson and Southern Arizona.